Senior Loan Officer at American Pacific Mortgage. Jeanette, good morning. How are you?
I'm great, Roy. How are you?
Fantastic. You ready for Christmas?
I'm all ready for whatever it's going to be.
All right, whatever it's going to be. What plans do you have for the big day?
Our plans, probably like many people, are very low key. Normally, my parents drive down from Oregon, and with our state, California, being shut down, they elected not to come. They have a large dog, so their fear was it's a 2-day drive, and they would get halfway here and nobody would let them spend the night. So I had visions of Mary and Joseph and no room at the inn, and figured that was going to be my parents. So they're not coming down this year. My younger son is quarantining because he's got some health things going on with his extended family. So it's going to be my older son and his wife and my grandkids over for a couple hours for Christmas Day. What about you?
Not sure. I'm hoping for a couple of invites for turkey dinner somewhere or ham. I have got an invite to my sister's house in San Diego, and I have another invite to go to St. George, Utah, to a good friend, John Hook. If you're watching, thank you for the invite. Mulling it around, but Connor and his significant other is coming with his dog to spend a bit of time with us on the 27th. And I'm really looking forward to that because we're going to go hiking, going to go do some sightseeing. He loves the snow. He's going to bring the snowboard. So I'm really excited. And they're bringing the husky dog. So make sure everybody is healthy, they've all, wearing masks, social distancing, but just to have people around, it's such a pleasure. I went to my doctor the other day. He was telling me how sad it is. He can't sleep at nights. His patients are lonely. They're desperate, financially hurting. He says that he's lost more patients in the last year to just the loneliness and suicide and the deaths than he has to COVID. And they've taken away in Las Vegas the buffets, and that was a big thing for seniors here to get out, to actually have interaction with people, and there's nowhere for them to go right now. So it's really challenging time. Only thing I would ask people to, and I'm sure you agree, if you know someone living alone, pick up the phone, say hello, wish them a Merry Christmas, tell them you're thinking about them. Really important. I want to start, Jeanette, an important thing today I want to talk about. We haven't touched on this, and that's the FHA loan limits that were announced a week or so ago.
Yes.
I know you're following this closely. Can you just tell me a little bit about the FHA loan limits? What are they based off? What are the new loan limits? Why are they important to buyers? And as I'm talking to you, I'm going to scroll, Jeanette, along the bottom of what the new loan limits are, so everybody can see them. So you take it from here and explain what the loan limits are and the importance of them in this buyer market.
Great. So every year, FHA and conventional, they look at the current loan amounts and then they reassess. And most of the time they always go up, although we've had a few years where they did go down. FHA loan limits tend to be a little bit behind conventional or a little bit lower than conventional, and they'll vary from county to county. So this is, as you're putting up, the maximum loan amount that we can do in each of those counties. It's up a little bit from last year, like I said, up a nice little bit. So that's a good thing. FHA loans tend to be more liberal, so they're a little easier to qualify for than conventional. They'll allow higher debt to income ratios. They're not as credit score driven, so people with lower FICO scores can oftentimes get a better interest rate with an FHA loan than they can with a conventional loan. The FHA loan limits, like I said, they're set and we have to abide by those. But typically for FHA loans, most times people don't pay points for either FHA loan or conventional, although they're more likely to pay some points, or they may be more likely to make sense to pay points on a conventional than they would on FHA.
Just explain the points, just so people understand what it means when they buy points. Are they buying down the rate?
Correct. They can buy up or down. So when people ask, what's your rate? We get rates like a menu. So the interest rates will be from the low twos up to the high threes typically. And each rate will come with either a cost or a credit associated with that. Prior to COVID, we were able to get a lot more credit than what we're currently able to get. The market's just not offering any credits or very much credit at this time. So when someone pays a point, 1 point is 1% of the loan amount.
Okay.
So, if it's a half a point, it's a half a percent. On a $400,000 loan, 1 point would be a $4,000 cost. People oftentimes on purchases, they'll say, well, I want to finance my closing costs. And you can't finance. You can't stack your closing costs onto your loan. You have to stack it onto the purchase price, not the loan amount. So if someone's paying a point or a percentage of a point, that's cash out of their pocket.
Jen, I want to show you a slide that I found, and basically this is a slide which shows I think last year the rates were about 3.39 or sorry, 3.93, like 4%. This year they're down to 3% or something. And one of the things that I'm seeing is that, for those buyers who are waiting for the market to get better or whatever, this is the perfect time for them because of the savings that they can get at this time. For instance, if they were to finance today on a 400,000 home, their savings right now over last year's loan rates were about 278 a month. That's incredible. And we know we need to get buyers off the fence right now. And I don't think there's a better time for a buyer, is there?
That's correct, Roy. And I've heard the same statistics where interest rates right now are about 1%, sometimes even slightly more, 1% lower than where they were this time last year. So it's a great time, excuse me, to get people moving. Sometimes people are thinking, oh, I'm going to wait because they think the home values might come down. But if the home values go down and the interest rates go up, you could end up paying more for the same house when the rates go up a little bit than you would if the rates stayed low. So I definitely encourage people, if you're thinking about buying, there hasn't been a better time in history interest rate wise to do so.
Correct. And that brings me to another point which I want to talk to you about. And that is that not only is it a great time to buy a home, a fantastic time for a seller to cash in an incredible amount of equity which they have gained. And I have had a few calls in the last week or two with people calling me and getting ready to sell right now. And I just saw another a graph, Jenna. I just want to bring it up. I hope this can be seen. And this is regarding the projection of what home sales, mortgage rates, home prices are going to do in the next year, and it's quite startling. If you, I'm going to just put this up here, Gina. Just give me a second here, and this graph just shows that mortgage rates, Fannie Mae projecting 2.8% for 2021, Freddie Mac 3%. In home sales are expected to rise by 7.06%. And home prices for next year are projected to go up by 6%. That sounds like a healthy real estate market to me, Jeanette.
I agree. And everything that I'm seeing is saying the same exact thing.
Yeah, it's pretty incredible right now. But there's a lot of fear. There's a lot of people concerned. If you had a buyer right now thinking about buying and they're saying they should wait for prices to fall, what would be your advice for them?
I always talk with my clients, especially if this is their home they're living in. They have to make sure they're comfortable with the payment, because one of the things that you're not addressing is the rent prices are going up considerably as well. I own a rental house in Marietta, and we looked for a new tenant this summer. I think it was like August. And I mean, we had over 30 people apply in a weekend. So it's just as difficult to get into a rental market right now. And the cost for a rental, they could buy the house for the same cost.
Yeah,
So
absolutely.
even if you're buying something and let's say that the market flattens a little bit or maybe even dips a little bit, if you're buying a house to live in, most people are buying it based on their monthly payment, not buying it based on the value of the house. So if it's a long term, even if we go through and you look at what happened to our market in 2008, 2009 when the home values dropped, we're back. We've recovered from that. Most places they're even higher than where they were prior to that. So yes, that was the most dramatic that I've ever seen, and we recovered from it. So you're paying for a monthly payment. Make sure you can afford your payment. Make sure you're not overextending yourself. And really, lenders are going to help you make sure of that as well, because they're very conservative, much more conservative today in what they're going to allow someone to qualify for than they were back in the 2004, 2005, when all we did was we'd hold up a mirror, you'd fog it, you qualified. We don't have those loans anymore. And that's a good thing.
That's a good thing, yeah. Good morning, Hugh McLaren, a Belfast man, lived around the corner from me, Lower Lanadon. What's a fair market? What's a fair market? I don't know where you saw that. We don't have a fair market, Hugh, but Jeanette, yesterday I was on one of the real estate broker sites. I check in there to see the nuances of real estate all over the country from different agents, what they're experiencing.
Mm-hmm.
So a comment on yesterday, which was kind of brings me up to my next topic. The real estate agent had posted that his client went to sell loan docs and asked to see the loan rate. He was originally quoted, the buyer was originally quoted 3%, but when they got to the table, they were told that the rate had jumped to 5 point something. I know that's very weird and strange, and there may be extenuating circumstances that I'm not aware of. However, could you talk about, because a lot of the comments said either the buyer or the agent maybe didn't do their due diligence and they should have locked in the rate. Maybe you could share a little bit about locking in rates, what that means for a buyer, when that should be done in a loan, and the importance of it.
Certainly. So I would say if somebody's going from a 3% rate to a 5% rate, there's something else going on. Like I can't even think of the time when I've done anything in the fives, which not too long ago would have been considered a great rate. So my first thought is that they're looking at APR, which the APR is not the interest rate. But as far as when to lock in, the market's been pretty flat lately. So there's not been a huge rush to lock in, but we can lock in as early as having a purchase contract. When we lock in, we have a choice of how long we want to lock the loan, whether it's 30 days or 60 days. I think we can even do some longer terms on our purchases. But the market hasn't necessitated doing the longer lock. The longer you lock the loan, you're guaranteeing that rate for a longer period of time. So it's going to be a little bit more expensive if you want to lock in for a longer period. Most purchase contracts are 30 days, 45 days anyways. So, a 30, 60-day lock is going to be acceptable for most people. I monitor sites, I subscribe to a site that all they do is analyze mortgage interest rates. And that's the first part of my day, is watching that, seeing what their recommendations are. He's way better predicting interest rates than I am. And I pass that information along to my clients. So, like for the last several weeks, I would say he's been saying that we should be floating or carefully floating. So just not a really big worry. But if their debt ratios are very tight and you can't afford for that rate to go up at all, I always lock that client in as soon as we can, because when interest rates do change, they tend to go up faster than they go down. And so, we want to make sure we're protecting our clients all the time.
And I know you did that very well. In closing, Jeanette, I just wanted to thank you very much for doing this. We're in 3 weeks in a row. Hopefully we can get another one in before the new year. Your number is on the bottom, and that's your office number. And they're still accepting calls up until Christmas Day?
We're actually closing our office on Christmas Eve and Christmas Day. because my team worked really hard this year and I wanted to give them a little extra time off. So all our purchase loans are all scheduled to close. We've got a couple more closing today, and then nothing else for the rest of this year. So I was comfortable giving them that extra day off.
You're a good boss, so you are.
Thank you. I try.
That's a nice Santa gift to your staff. I know you've had a great year. It's been a fantastic year in real estate. Absolutely amazing. We listed 82 new homes yesterday, 82 homes sold. So we need homes to sell. We need homes to sell for our many buyers that are looking to get into homeownership, building wealth for themselves. I want to thank you very much. Wish you a Merry Christmas. Jeanette's number's on the bottom. Please give her a call. Looking to sell or purchase in California or Southern Nevada, Henderson, Las Vegas. Give us a call also. Everybody, have a safe Merry Christmas. Thanks again, Jeanette.
Merry Christmas to you, Roy.
God bless. Take care.